The U.S. Federal Reserve lowered interest rates 50 basis points on Wednesday. Wasn't a great surprise. Seems like it's very good news for stocks, and yet the stock market, after showing a little bit of strength, pulled back. I'm going to explain why. I'm going to show you what I think is going to happen next. And then I'll give you my analysis of some of those big name stocks: NVDA, Amazon, Apple, Microsoft, and Tesla. We'll also take a look at the chart of gold, because that has been a strong performer in this expectation of lowering interest rates. But let's begin with explaining why the market did not really move up well on the good news that the Fed was lowering rates. The main reason is the old trader's adage, buy the rumor, sell the news. The market moved up over the last 2 weeks in anticipation that the Fed would make a bigger rate cut than was expected, just a month ago. A month ago, the bond market was predicting, a 35% chance of a 50 basis point cut and a 65% chance of a quarter point cut. Well, what actually happened was the opposite. Coming into the Fed meeting on Wednesday, the bond market was now predicting a 65% chance of a half a point rate cut and a 35% chance of a quarter point. So the market had moved up. The bond market had moved up, and in doing so, it was predicting what the Fed would do, and the bond market's pretty good at achieving that prediction. So when the Fed actually announces, hey, we're going to lower rates 50 basis points, the market says, yeah, we thought you would, and there's a little bit of a buying spree on the news, and then the market reversed and went lower. The other reason is what I talked about in this past weekend's video, where I said the problem with the market right now is it has rallied up into resistance. And my expectation was we would see a pullback, not a significant one, and I'm going to go into how much of a pullback I expect in just a moment. But when markets rally into resistance, they usually get stuck at resistance. It's just a very simple rule. In my 35 years of trading, it's one of those things, I should put it on a t-shirt because it happens over and over again. So let's take a look here at the chart of the S&P. And this is just a 5-day, 5-minute chart. What I want to show here is there's resistance, and the market has been moving up over the last couple of weeks. On the news of the Fed, right there at 2 o'clock Eastern, you had this quick bump up, hit resistance, and pull back. Now let's take a little longer term look at this. We'll go 6-month daily. And there you can see better. We had this rally up to resistance. Resistance is the ceiling price here, and it got stuck, pulled back, rallied into resistance, and so far pulled back. So what do I think is going to happen next? Well, nothing is for certain. First of all, let's explain that. But as traders, as investors, we should trade what will probably happen. And what will probably happen is we'll probably see a pullback for a couple of days, and it should take the market back to this upward trend line. So if you go back to my video on the weekend, this is what I described would happen, and I'm sticking with that. I think the S&P pulls back to that trend line, bounces off of it, retests resistance, and ultimately builds a pattern like this and then breaks to the upside. That's what's likely to happen. Now, certainly we could break the upward trend line, and that would be bad, and certainly we could break tomorrow through that resistance. That would be good, but that's not what will probably happen. The upside breakout in the next couple of days, it's like a 20-30% chance. A break of that upward trend line, maybe a 30% chance. Most likely, we'll pull back to that trend line, bounce, go sideways, and then ultimately break out. Now, why? A couple of things. First of all, lower interest rates are good for the market. Second thing is we're coming into the traditionally strong season for the stock market. A lot of people get so frustrated with the market in September, they leave, and then they miss the big bounce back rally. September's historically the worst month of the year for the market, and this year it's hasn't been great, hasn't been terrible. But I do think that as we go into October, November, we should see the market start to rally, and perhaps a Santa Claus rally, because an environment where interest rates are being lowered, and I don't think Wednesday's reduction in rates is the last one we're going to see. So in an environment where interest rates are coming down, you're going to see money move into stocks. And what's important, and I've talked about this over the last couple of months, is that you're probably seeing a rotation. You're seeing money moving out of those big 7 stocks, the ones that have really led the market and propped the S&P 500 up. You're seeing money move out of those and into the broader market. We're seeing money start to pick up small cap stocks. We're certainly seeing money going into interest rate sectors like the real estate investment trusts. Those interest rate things, banks have been doing well. So now let's take a look at some of those big name stocks and just try to analyze where they're likely to go. Because I think that, these widely held names that just about every big investment fund owns, there's some concern in those stocks. And I think taking money out of those and putting them in the broader market, trying to pick up bargains in the small cap and mid cap area is maybe a good move. But let's dive in first to NVIDIA. And I've done a number of videos on NVIDIA. The recent one was just calling the top on NVIDIA there and then saying it was likely going to move lower on earnings there. We then rallied back up to resistance, got stuck, much like the market has, and we're now in a pattern called a pennant pattern. I'm going to make this a 6-month daily chart. If I draw a line across these tops and a line across these bottoms, you can see that it looks like a pennant. We have this rally up, then a pull back, and a rally up, and a pull back. And so this is a pattern of compressing volatility. And eventually, we should break out to the upside from that pattern. But in the short term, I think NVIDIA is a little bit of dead money. Now, if you own it long term, I think it's a hold. If you're looking to buy it, I think there's better places because I just think it's most likely going to head sideways. Let's take a look at Apple. AAPL is a symbol. And we're going to, here again, look at the 6-month daily chart. Now, Apple had an upward trend and it broke it right in here. It's managed to come back. My concern now is that it built a falling top. So anytime you build a top that's lower than the previous one, that's a sign that the sellers are starting to get a little more power. And therefore, I think Apple is one to be cautious with. Now, you could say that this is also a pennant. If I draw a line across the tops and bottoms, and if we go into here and then we break to the upside, then I think Apple is a buy. But until then, I'd be a holder of Apple if you're in it. I would not be a buyer of it if you're not in it. Wouldn't be a seller of it though, because we haven't broken down from the falling top. If we break down through this trend line here, then I think you want to be a little bit more careful. All right, let's dive into Amazon. So Amazon chart, here's the weekly chart. I'm going to show this first. Here is your upward trend line, and that is held. So that means the buyers are still in control. We have the potential for a falling top. We haven't reversed yet, so it's not really a falling top yet, but if we were to come down and test this trend line from a falling top, then I think it's a sell. For now, it's a hold. I would not buy because it's very volatile, and volatility is a sign of uncertainty. So the more volatile a stock is, the more uncertain investors are. Yes, it still has upward momentum, but you can sense that the buyers and sellers aren't really sure whether this thing's going to hang in there. So I'd be careful with Amazon. Again, it's a hold for now. Let's take a look at Tesla. Now, Tesla, this is the weekly chart. Here's your downward trend line. And we tried to break it here, but couldn't. Not really unexpected, but Tesla is building upward momentum. And if it can break this downward trend line from this rising bottom, then I'd be bullish on Tesla. For now, I'm slightly negative because the trend is down, but I like that there's rising bottoms building. And if we can break to the upside, then I think you could see Tesla actually start to perform. It's really been an underperformer for the last couple of years, but perhaps it's time for it to shine. All right, how about Microsoft? Here's the upward trend line, broken, so that's a negative. If it now makes a falling top and then rolls over and moves through this floor, it turns into a sell. Right now it's a hold, and the reason is because it hasn't yet broken down from a falling top. So typically the way markets make tops is you go up, you pull back, you make a falling top, and then you break down. So Microsoft is kind of right here. And if it then makes that falling top, breaks through this floor, which is right here, then you want to be a seller. For now, it's a hold. I would not be a buyer of Microsoft. Remember, this is just my thoughts. I'm trying to educate here. Don't take this as investment advice. Do your own due diligence, blah, blah, blah. You know the drill. I'm just here to give you my thoughts and take it for what you've paid for it, which is exactly $0. All right, so let's move on now to gold, GLD. And here is the gold chart, very strong upward trend. It's getting a little extended. I worry that we may be due for a bit of a breakdown and a pullback to this trend line. And so don't be surprised if we pull back a little bit, but the momentum is up. It's one of the sectors that's really leading the market. And so I think this is a hold. I wouldn't consider it a buy here just because it's extended. I prefer to buy markets when you get breakouts from low volatility, from optimism. I just did a video on that topic this past week. That's something to look for, but for now, it's a good hold. All right, so what do you think? Market going to break to new highs? Is market going to correct? Are we due for a crash? My sense is a little bit of a pullback in the short term, but longer term, looking out weeks or a couple months, we should be higher. But I'd like to hear your thoughts. Leave those in the comments. One last thing, I do a newsletter every week. It's free. I always like to promote the free stuff. So just go to stockscores.com and right here where it says see more, start your free Stockscores membership and free weekly newsletter. I write my trading tactics. I give a couple of stock picks every week and it's no charge. So give that a look. Make sure you're subscribed to the channel. Half of you are not. I'd appreciate it if all of you were. And most importantly, as always, trade well.